is your view on Lyft?
So a couple of things here. First, I'm not sure you want to read too much into the short-term trading activity. It is a high multiple story stock. You'd expect to see a little volatility around that. That being said, we did launch with a neutral rating. Bottom line for me, you have to look too far out and make some really big assumptions here around things like growth rate, margin profile, and whether or when they can get to a self-driving car future.
And look, even when I interviewed the CEO, Logan Green, he said, he couldn't give us a date when self-driving cars would be available, and yet many investors were sort of betting on them not having to pay drivers and relying on self-driving technology. Mandeep, you seem to think that the expectations for Lyft are too high, and Lyft won't be able to meet those expectations.
Yeah, so in their S1, they laid themselves out as a transportation as a service company, and a lot of people were expecting them to trade at the same multiples as software as a services companies. We don't think that's going to happen. This is still a very rudimentary market, although it's going to be very disruptive service, but no one knows the long-term profitability potential, and it just goes to show that, we're still in the early stages of this market.
Now, Jake, what do you make of Carl Icahn backing out here? I mean, the Lyft founders own 5% of shares, but have almost 50% of voting power. It is not unusual in technology. You see the same thing at Facebook, at Google. But for a company that, maybe doesn't have a lot of leverage, what do you make of a big name brand investor backing out?
Look, I'm not sure we'd make a whole lot out of it. He's been in 4 years, made a lot of money on it, not so surprising. I guess the bigger question is, what about the other large holders? You've got folks like Google, Fidelity, GM, Rakuten in there. My guess is those are more long-term holders, right? It would be scary to me if we saw one of those types leave.
Of course, Lyft investors are backing them up. I sat down with Ben Horowitz of Andreessen Horowitz on the day of the IPO. He's on the board. Of course, he's a biased narrator, but he had this to say about what Lyft has managed to pull off. Take a listen.
All these founders in Silicon Valley go, oh, nobody believed in us. When John Logan said it, they're telling the truth. Like literally, everybody had written them off. And for them to come back and go from, when I stepped onto the board, I think we're at about 16% share in the U.S. and we're at 39% today. So just amazing, really, really a thrilling thing.
So Mandeep, going from 16 to 39% market share in the United States in a matter of years, do you not think that's impressive enough?
I think it's impressive, but it's built on a lot of subsidies. And like I said, this market is still rudimentary. When you look at ride-hailing and the ancillary services they are offering on the bikes and scooter side, if you offer subsidies and you're burning a lot of cash, you can gain market share. But at the end of the day, you have to retain the subscribers, you have to show steady upsell, and that is much harder. So I would wait for at least a few quarters to see that steady growth in active riders and active rider pricing and stuff like that.
And look, I'd say from my vantage point that the key question here isn't what you've done, it's what you're going to do. And from the big questions around the stock, profit potential is certainly one of them that Mandeep points to. You only got 4 ways you're going to get there. You can cut driver pay, you can cut incentives that you've been running, you can bring your insurance costs down, or you can get self-driving cars. None of those things are immediately obvious.
Now, Jake, would you have the same concerns about Uber, even though it is a much bigger business?
So we don't know as much about Uber yet, right? We don't have the public filings, but it is a bit of a different animal. Number one, it's the market leader. Number two, they have a big international business. And number three, they have a large food delivery business. So a bit of a different story there.
Number three, they have a large food delivery business that they are pouring a lot of money into, and they've got other bets. Lyft sort of pitched itself as focus. Uber has, a number of different bets spread around. I mean, does that make make Lyft a better case than Uber?
So I think one of the things we got to figure out here is what does the financial profile of some of those other businesses look like? We just don't have the access to the financial detail for Uber yet, so hard to say. The food delivery business in particular, though, potentially stands out, right? You do have some public companies, a company like Grubhub, where the profit margins are quite high.
Now, Mandeep, Uber hasn't, we haven't seen the S1, but Uber has actually released some financial data for the last several quarters, which show that Uber's revenue much bigger than Lyft's, but also losses much bigger than Lyft. You know, have you done any preliminary work on how they actually compare?
Yeah, so obviously they're about 5 times bigger in revenue and booking. And, you know, it just goes to show that they are obviously diversified, but at the end of the day, their top line is driven more by, you know, kind of international growth as well as U.S. growth. So it's a very balanced kind of top line, whereas Lyft is more U.S. focused. And I would say Lyft has higher take rates. So one of the things we were surprised by is Lyft has take rates of about 28% now, and they have grown impressively over the last 2 years. And if I compare them to the online travel guys, Booking and Expedia, they're much better. So it's really for Lyft and Uber, the story is about containing costs now. Their take rates are very good. It's about containing costs, and I think that applies to both of them.